Hello, everyone, and welcome back to the PetroNerds podcast. I am joined today. This is Friday, August 5th. It is 2022, and I'm joined today by none other than a guest we've had on the podcast before, Gabby Richmond. Gabby, good morning. How are you?
Good morning. I'm good, Trisha. Thanks for having me back again. Do another fliparoo.
Absolutely. This is our third flipperoo. Well, we did one flipperoo and then we turned it into 2 episodes. This will be a flipperoo. This is going to be really fun. Again, I have Gabby has not told me the questions she's going to ask, so we're shooting from the hip. But there's so much going on in the market. Gabby is she's Australian, so I kind of like this pulling in this Australian vibe because I know she's going to ask questions about China, which is great. So she, even if she's not, she has to now. But it's
Put
really
me on
good.
the
She's a
spot.
she's a good she's a good commentator, and this will be fun. But before we dive into this, and it is Friday morning. This is episode 55, I believe. We may have some fudging on the numbers of which episode number this is. But WTI is 90.02, and the reason that's relevant is because yesterday and Thursday we saw WTI actually drop, or we saw that in the 80s. And if you were looking at futures, you saw 87, 86, like we were seeing oil prices well in the 80s. And I've been talking to people about ADL oil prices for a while. Didn't quite expect we'd see it, as soon as we did. But now we're hanging around this 90 level. Brent is 95.68. Henry Hub is sitting at 8.15. Dutch TTF, dollars per MMBTU so natural gas in Europe is right about 59, the 59 to 60 mark. Which is just, it's still, I mean, that's ridiculously high. And our 30-year mortgage is sitting out around 516 from what I'm seeing on CNBC. And I added to tell people like that, if you're looking at the 10-year yield, it's really that 30-year mortgage when we saw, 6%. That is I know you're going to ask some questions on the market and recession and what's going on. And this mortgage rate and actually the 10-year yield, which is about 285 right now, has a lot to do with that. And it's how people are interpreting and how, bonds are working and everything. So without further ado, Gabby, it is so great to have you. And I really appreciate you, doing this on a Friday morning. And I'm pumped for this. So let's go.
I'm excited. Thanks for having me. Yeah, it's funny that when you talk about Dutch TTF, I was just saying something from Australia that Australian energy prices are something like $323 a kilowatt or a megawatt hour. I have to double check what the actual.
Oh,
And I just
wow.
thought that was
Yeah.
absolutely insane. Even if you discounted about a third accounting for currency, everything's on
And
the fritz.
And Australia has implemented or is trying to implement extremely aggressive climate agendas with your
Yes,
new
especially with the new
government that's been in
government.
place. Yeah,
It's
and
very
some of them
green.
that they can't even roll back. I believe it was the laws that they're trying to implement, or that they can increase it, so they can make it more aggressive, but they can't decrease it. So the stringency, I assume, is going to will probably impact electricity prices. And I'm guessing you guys are feeling it just like everyone else, especially in Europe on that tightness. But Australia does have natural gas supply and coal, so it's
Yes.
security supply won't be quite as scary if people are smart enough to
if,
burn the
if we
coal
really
first
need
this
it,
winter.
we could always step into it.
Yes,
So I'm going to
yes.
start with the payroll report that came out this morning. And just for context, it came out at about 528,000. Expectations were about 250. Previous
Hmm.
month, I want to say, was around 360, but correct me if I'm wrong. I can't remember the exact number. And the markets responded just wacky. I think as they have been, I try to understand why the market is doing what it's doing, and I can't get my head around it. You know, Brent, Brent crude went up, WTI went up, and that was the exact opposite reaction that I thought it would have because we know that this means the Fed's going to have to hike interest rates again 75 basis points. Do you have any commentary on why this is reacting the way that it is? Are you as shocked as I am? If you want to add any commentary you have on the payroll report, I was surprised based on other economic indicators that came out as strong as it did.
So yeah, I think that there's a few things with that, and that's a great question because it allows us to talk about sort of what is the market doing, and I think and sort of interpreting oil prices, interpreting recession, and I think that the stock market, as in many times, and this is one of them, and has been, is everyone, the stock market and commentators on it want to, they want to control the market, and they can't. And so when people say like a jobs report like this, and I haven't seen the exact numbers, but it was positive, it was strong, and the market is quacky. You're hearing the commentators saying, "Oh, is this good or is this bad?" And I would say the reason it's responded the way it did is because, and oil prices would go up, is that strong jobs report means that the economy is like jobs lag, so they're the last shoe to drop in a recession, and that's why the market and commentators and people are very off. Is that when you have high inflation, then you raise rates, and about 2 years later, that's when you peak unemployment. So we are way behind the curve. We're actually, and the actual consumer on and the average business is still just now really feeling the brunt of heavy inflation, of this 9.1% inflation. It's ratcheted up. We're feeling it now, and it's going to get worse. And so then we'll have higher rates. We're going to have job losses, and so the market interpreted this probably a little wacky, is because some folks are saying, "Oh, good, we're not going to imminent recession because the job market is good." The flip side of that is the job market's too good, and we have really high inflation, and therefore the Fed is going to continue with their aggressive rate hike. So that pullback you saw last couple weeks, with all this very positive commentary in the market, and the FANG stocks going up and all these stocks going up, was because people in the market wanted to interpret that the Fed, they were basically baking in a Fed pivot, that the Fed would raise rates too high, we would go into recession, and then the Fed would have to be accommodative and start policy easing. And so that's where there's a constant tug of war on stocks right now, is whether or not the Fed's going to raise rates and when they're going to be accommodative. And I think they've got it completely wrong. I think they have not. We are going to have a recession. I mean, it's fascinating to me that, I don't know if you saw, the Bank of England came out and said yesterday they raised rates
I
50
didn't.
basis points. And the head of the Bank of England actually came out and was, if you can just imagine profile doing this. The Bank of England came out and said, we are going into recession. It's going to be a long one. It's going to be over a year, and we believe that we'll see. They're banking on 13.3% inflation is what they see it peaking at, and I mean that's high, and it's really scary. And they're increasing their electricity costs. Their price cap for the UK electricity costs, I believe Ofgem has come out and said, this was, a few weeks ago, Ofgem came out and said, this UK regulator for utilities said that the cap was gonna be £500, and it's like, they already have quadrupled electricity prices. So the market is not, I mean, and I don't think our stock market is actually doing a very good job interpreting all that. If that's happening in the UK, yes,
Yeah.
we have access to energy here, but 8.15 net gas is extremely high, and it's crushing. Yeah, the little relief on oil prices, and that's another thing of why oil prices were so hammered, was because people, and we can get into that later, of the interpretation of we're going to recession, therefore oil prices are getting hammered. Now with oil prices, coming up a little bit, I do think that's a bit from the jobs report, of people saying, okay, well, it's not as bad as we think. People aren't losing their jobs, just yet. And so that's a big deal. And there's a lot of controversy on that jobs data, because I think, depending on if you're hawkish or dovish within the Fed pivot, I think that what's happening within the Fed and within the market is there is a bit of this confusion, and I think, and certainly we see it from, I think, more of the left. We see Democrats and a lot of folks who really want the Fed to be focusing on employment, because obviously this votes, job losses, this is serious. So if they're focused on employment, and they're accommodative and the dovish, they're going to spend more money, and people like this, they like money. And the problem is I mean, we're hearing now more and more, that's really, people have come to the conclusion that that's what's got us here in the first place. And so if you're listening to BBC or listen to other analysis on US inflation, and the reason why it's different is, and they lump Trump into saying that spending, we did have massive we had a lot of stimulus, and then we had an administration who spent a lot of money, on the Great Recovery Act and all these things. And so now we're feeling that inflation, as it's lagged a bit. So there's a lot going on in the market that has nothing to do with, when you pull yourself out politically, these are just repercussions of it. And certainly fiscal and fiscal and monetary stimulus help put the US into this situation.
Yeah. Well, and consumers are hurting the worst. And you touched on this one podcast ago, two podcasts ago, with your guest, that companies are just passing on the costs to consumers from an inflation perspective. And so we see earnings that, for a lot of companies, I was kind of surprised at how well they did. I mean, we knew Liberty Energy, Chevron, we knew that the oil and gas companies and adjacent companies would do well, but I was surprised by other companies and their earnings. Do you think that that's due to passing on the cost to consumers?
Yeah, and I think that's it's the part of that look, the sort of question, like, are we in a recession? Does it look like we're in a recession? And I think there has been a lot of disappointing earnings from the standpoint of tech. So when you're saying Snapchat, and you're saying, and we talked last time we were doing the fliparoo with you, we talked about Netflix, and I think that thesis we were having has really come home to roost. I mean, you can talk to people about stuff that they're cutting back on, and subscriptions is one of them, and that's what we really hear in the Walmart earnings call. So I think there's a discount. There's Chuck buckets that are doing well, folks that can pass along that inflation, folks that are pretty resilient. So the certain tech stocks, the reason tech stocks have buoyed and bounced up was that this sort of thesis that, hey, we are going to recession, which means the Fed's going to have to cool on raising rates, and therefore that's good for tech. So that's why this jobs report should be pretty wacky with the market, is because that means the Fed is going to really, be leaning into they're not going to have an excuse. They're going to have to raise rates. And quite frankly, people are ridiculous. The market's ridiculous. They have to raise rates. You cannot have this uncontrollable inflation. Like, it will cause problems down the road if you don't control it now. And that's what the reason people are having such a hard time understanding this is because it hasn't happened in so long, and to this extent. So we have really not seen this since pre 70s, and so most people just don't understand it and don't have the tools to deal with it. But those earnings from, obviously oil and gas, we saw very strong, really strong earnings because the price, very good refining margins. So if you had exposure Chevron, Exxon on the refining side, that was fantastic. And then you see the little bit bounce in some tech, but the companies like the Netflixes, like the Snapchats, obviously anything. If it's a Peloton, or if it's something that was great during COVID, it's not really. I mean, DocuSign, these companies, they're not as needed now, and they never should have had the valuations they had before. And by the way, the stock market's still extremely overvalued. So when you look at the PE ratios, price to equity ratios on most of these companies, they're not a buy territory. So we have a lot of room to go to move the stock market down if that's people's gauge of recession. 2008, it took Lehman Brothers collapsing, and then that's when we saw that market really declining, and we're eventually going to see that. We're just not quite there. And I think the other, Walmart and Target, and Walmart they haven't put out the call to listen to, but you can read it. It was extremely damning. And that call was that was the end of July. And that was really a really, really damning call to the market. And that, I mean, you saw the market come down considerably,
Yeah.
but that was because the bottom 40% and many other people too that are purchasing from Walmart, but those people are really, really hurting, and they're only buying food and fuel, and their margins on food are much thinner. And that really got back into the food inflation part, which is just crushing. So Walmart said specifically, we have not experienced, inflation to these extent, like the sustained inflation, especially in food. And that's a thinner margin business. So when everybody's just buying food, that's going to impact their bottom line, and they're buying food and fuel. And that's something really, I think, prevalent that people have to realize. If that food inflation continues, which if you look at food at home, that's still, if you're breaking down, the Bureau of Statistics data, you can see that, food at home is much higher than food going out. And that means that companies like a McDonald's and companies like that are in this lower price category will probably perform pretty well, because they're going to be a little bit more resilient in it. And that's when, if you're looking at companies like that are going to perform well, historically a Walmart should perform well in a recession. It means that people are not appreciating this as a unique style recession. This is a unique style economy. We're at just an unprecedented level for the volatility and the uniqueness of what's going on in the globe, to get us to this point. Um, and yeah, I mean, there's a lot going on there that has to be unpacked to be understood.
Couldn't agree with you more. And as we touch on earnings, I was surprised at the commentary from a lot of oil and gas CEOs around their forecasts for WTI and where they think price is going to go, and that they seem pretty confident that there's price stability where we're at. And that shocked me. I don't know a ton, but I do know enough to say that if we do hit a recession, demand destruction will be significant enough that the supply side is kind of a mute point. I would love to get your thoughts on that, and if you would agree with these CEOs in terms of how confident they are that they can operate with this continued price environment.
Yeah, I mean, I mean, as you know, we've talked about this offline and also, on a previous podcast, and just over time, is that I think they're, the largely, for the most part, most oil and gas company CEOs have been exceptionally bullish on oil prices. And I mean, obviously, they're bullish on gas prices now for good reason, but they've been bullish on oil prices, and they've sort of had a simple thesis that they've talked about demand a lot. And I think that's probably where the thesis to me has been breaking down, or not appreciating that this is such a unique environment to get you to these high oil prices. And I think it was, I heard Devin, I haven't had a chance to, they just posted some of these, so I haven't had a chance to listen to all of them. But I mean, actually, Chris Wright talked about it at the opening of the Liberty Energy call. That he did talk about the risk, obviously, being recession. If you have a slowdown, I mean, basic stuff. If you have a mild slowdown, you're going to see a mild impact to demand. If it's really big, obviously, a bigger impact. So that is a risk. I'd say overwhelmingly, though, most folks feel comfortable because prices are high, and it is. I would say it's a bit of a false sense of security. The fact that we saw $87 oil yesterday, that should tell you that we have a false sense of security and that demand worries. Now, traders also move the market like crazy. I mean, I've
There's no
talked in
sense
previous
sometimes.
podcasts. Yes. That there can be a $5 swing in any day that's just trading moves. Now you have so much algorithmic trading, you have less humans actually doing the trading. So you can see big swings that are not necessarily representative of supply and demand. And that's just the reality of trading this commodity. But behind that, it usually reflects reality. And I think that, initially people were disappointed in obviously the Saudi output, that the OPEC meeting of saying we're going to increase by 100,000 barrels a day. And I think there's something to be said about that. One, it's that they've increased their 29, I mean, they're almost at 30 million barrels a day, OPEC is. So if they were to add a bunch of supply into a market that they're not going to admit, hey, we're going to reset, the world's going to recession, but there's no one that can look around this and say this is sustainable. What's going on in Europe and elsewhere. And I'm been very clear with folks. I really think that the European energy crisis is what's going to pull the globe into recession. It's going to be the first sort of starting point. So I think that folks within OPEC, are at least seeing that, and so they're not going to add a bunch of barrels. But the market reacted bullishly to that, saying, "Oh, they're not going to add it." And then obviously the next day, yesterday we saw the pullback in oil prices because of worries of recession. So it's all sort of this interpretation. But I think the cover that CEOs and industry leaders have on this bullish thesis, they don't have that cover anymore. This is a uniquely complex market, and that's why I really think it's super super important for every CEO in and outside the oil and gas industry to be doing, to really be thinking outside the box, to be pushing themselves on their thesis and really have the risk scenarios looked at, and what does it mean for, if prices drop to 80 tomorrow, what does it mean for 75? And for many of these companies, I think they're in a great position. I mean, I think you've heard,
Yeah.
at least in Devon and some others, equating oil prices and inflation and how much inflation they have to see for oil prices, and they're in a good spot. The trick is, if you're going to grow production, can you actually get more rigs? And I do think that some of the publics were, because they were late to the party of adding, activity back, and so focused on these shareholder returns and just limiting this production growth, that yeah, they can't grab a bunch of rigs now. We were tapped out basically on frac fleets. So Liberty Energy and others are reactivating, adding frac fleets back, but we're sort of just getting to that point. And quite frankly, I was on David Ramsden Wood's podcast earlier this week, and he is negative on the crude oil production thesis and outlook, and I'm not. It's very very hard to look at the map and see how many wells are being drilled and talk to every operator and be in this business as you are, and see how much activity is going on, and then not expect production to go up. And it doesn't go up immediately, but if New Mexico is producing 1.5 million barrels a day, and that's two counties in New Mexico, that's Lee and Eddy County, are producing 1.5 million barrels per day, we've got some good well. This is not a production problem. And the more I'm talking to operators on the private side, even in the public side, I'm going to have Aaron Hunter with ConocoPhillips back on the podcast, and I think these wells look pretty good, and that's what we're hearing from operators as well. So you can see things like where Gulf of Mexico will pull down production. It's taking us a while to get back to where we were, but there's a risk that we are actually going to be adding production pretty, not say strong, like a million barrels a day on the market, but we're incrementally adding production as the global economy is softening and demand is softening. And I think that's where it's sort of like when people say, well, everybody's hiring, so we're still in a good spot. It takes a while. And so demand will lag. And already in the US, we're seeing, real concerns on gasoline demand. Not that it's cratered by any means, but we peaked in December of last year, and it's really kind of steadily come down on total, product demand in the US. And that's something, really important to watch, is that as the economy slows, you just consume less diesel. And this oil has been very expensive on the backdrop of very expensive everything else. And that's incredibly important, is inflation and high oil prices. This has not been seen together, including for most executives who I respect a lot, but they haven't seen it either.
Yeah, and we see the EEA put out numbers saying that crude inventories have also grown as of last week, I think the 29th of July. When you look at it across the board, it's not really a huge increase, but
Right.
it is a nominal amount. And I think it's interesting what you're saying, because that's part of my confusion, and what my confusion has been, looking at some of these companies and going, well, why aren't your fears more significant around the impact of a recession? And good context is, operating in this price environment, I mean, you can make money anywhere down to $40 a barrel. Correct me if I'm wrong. So you start to trim margins, but it doesn't really break the bank.
Well, yeah, and I think there's also a healthy benefit to prices cooling off. I mean, it's beneficial for the consumer, it's beneficial for the industry, for the craziness and the inflation to cool off, and it's multifold. I mean, as a public CEO, you don't want to come out and say, hey, we're going to recession and prices are going down. Like, so you can't do that. You're not going to do
Yeah.
that. That makes total sense. But it's like, for some companies may really be, the bullish thesis is like, okay, what's the level of bullishness, right? Is it, if you're comfortable at $75 oil, I mean, you should be running these risk scenarios. So that's pretty, I mean, that's, I think it's really relevant. And it's also, it's confusing. Of the supply demand dynamics are really confusing, because to your point on inventory levels, if you're looking at the EIA data and you saw that we had a modest, build on a few things, that spooked the market in a way that the trend of the overall, refined product demand, kind of cooling off over time. Really, the month of July is a hot driving month, and yet that we also had very high oil prices, and so we saw that cool off. And most folks that do oil and gas are analyzing that in inventories, aren't looking at Walmart and studying all these other things. And so I think there's why this is such a unique time is there's a bit of a mismatch there, and you have to really look at all these factors. And so that inventory, though, is also the reason you get a lot of folks pointing to the very bullish thesis, is that look at, the SPR. We are at 19, for strategic petroleum reserves, we've sold off so much. We are at 1985 lows. So we have there's so many correlations, they were correlations to 2007, 2008. Consumer sentiment is off to 1970 lows. We are almost now pre 1970 lows. So when you think about the 1970s, the 1980s, and you look at, high inflation and Volcker and having to raise rates, we had high inflation, then rates, interest rates were rose aggressively. And then 2 years later, in 1982, we peaked unemployment at like 13% or 11 or 12%. Sorry. And so that's that lagging factor, and oil demand sort of works with that. And I think there's where people are, it's a little hard to interpret when you're already seeing a little bit. And the reason you're already seeing a little bit of that cooling in demand is because those consumers are trying to buy groceries and they're trying to heat their home. And natural gas prices probably aren't going to cool off. And so $8 an MCF, we've seen, nearly 14%, price increases in electricity from an inflationary standpoint. And that is really, really hurting folks. We haven't seen the 500 pounds a month that they're seeing in the UK. But we're seeing obviously increases, and that's such a big deal to the consumer. And that's why I say it's going to really break, it's really going to break Europe. We're seeing businesses, within Europe who have several $1,000s a month in electricity bills. And the European Chancellor Olaf Scholz has talked about, we'll have these slight increases of electricity bills, and people, like, we've already seen them. They're insane, and they can't afford it.
Yeah.
So that's just going to be something. And if that was to happen in America, I think the wheels come off a bit. I don't think the American consumer could swallow a $500 a month on average, a $500 a month electricity bill. I think it's
No way.
just an insane number. And the fact that they're going to have to be cool, curbing their consumption, because they don't have enough. They don't actually have enough natural gas. We aren't experiencing that. We will have enough natural gas. But yeah, we have some, the inventory level. So there's a myriad of factors that you have to look at all together, and it makes this extraordinarily complex and hard to just say it's going one direction and I'm comfortable with this. But overall, there's more factors on the negative side for demand and the global economy than there are on the positive.
That's basically my next question is, are you bullish or bearish? When we
I'm
talk about inventories,
mhm.
oh, sorry, continue.
No. Go ahead. Go ahead.
So when we talk about inventories, I do want to touch on Saudi because you mentioned the 100,000 barrel increase, which is really negligible. I mean, it's one of the smallest increases they've ever done. So people who are making a fuss about it, let's keep perspective. I thought what was interesting was when they raised prices. And I wanted to get your input on that and whether you think that's a signal that they actually don't have the spare production capacity.
Just looking back at Saudi production. They're about 10.5 million barrels per day, and we'll see that updated number when OPEC report comes out. I think that, and they're enjoying a lot of flexibility of, saying things to the market. They haven't been super vocal, as you've noticed. Like, we're not seeing a ton of stuff. They don't have to come out because they don't have to do much. I mean, $100 oil, this is great for them. Everybody's recovered their coffers, and from a fiscal side, all these oil countries are doing pretty well. There's some complexities. I mean, Iraq is gets a lot of its natural gas from Iran. They're not getting it, so they're having black and brownouts. So big problems there, even if they're producing a ton of oil. But I think for the Saudis, for one, you're 100% right. That 100,000 barrel a day increase is pretty negligible. That's why the market, responded, I think, accurately the way they did. Um, However, then they sort of like, oh well, do we really need it anyway? And I think that's what the Saudis are looking at. Of they're producing 10.5 million barrels a day. So if there has to be a cut, they will have to cut. And so that there you want to ramp it up to a level that you can actually cut from. So there's that. Spare capacity, it's a little hard. If you look at the rig count, the Saudi rig count and the UAE rig count, and then you look back at production and you just line up those charts, and you can, Google them and find these online. You'll notice one thing really quickly: production and rigs don't correlate perfectly. There is a yes, there's a rig height and production height, but the rig count doesn't equate to 10.5 million barrels a day. So the Saudis have been able to add production back without with a fraction of the rigs that they had prior. So it's very different than U.S. shale. Like there's a lot of different factors going into that, but it's just something people have to appreciate. Of yes, are they selling it from stockpiling? Is there different production being brought online? There's a number of things going on in that department, and I would love to have some folks from Oxford Institute for Energy Studies and others on the podcast to really get into the Saudi production and where it's coming from. But I am, you know, the reason I'm always a little bit more optimistic, I think, on spare capacity than some others, is that this industry is just really resilient. And so when you sort of are asking for it, yes, they're controlling that production, but it usually comes. Also oil prices came down because Libyan output went up. And we'll see that. I'm sure we'll see that in monthly data when the OPEC report comes out. And so Libya's this wild card: goes up, goes down, it's all over the map. And you would say, well, how does it do that? And it's like, well, it's very politically driven. So if you look at Libyan oil production, you can be at over a million barrels a day to 200,000 barrels a day in a heartbeat. That's pretty big for the global oil market in a good day. It's really hard for the market to swallow that when demand's coming down and then you have this erratic supply. So I think they're balancing, they have these factors to balance. Obviously, they're not going to talk about them so much because they don't want them to be a big deal. And then it's and Nigeria is the same way. The up and down on that, sort of like when you're looking at U.S. production and you see Gulf of Mexico being down by 300,000 barrels a day, that pulls the whole growth story down. So yes, I'm not as worried. They're nearly 30 million barrels a day for supply. Adding output in a softening global economy, we're probably okay, unless the wild card's going to be Russia. And I think for many ways, it's that how much are they going to export, right? Obviously we know the Russian economy is backsliding, so I'm certain that their demand is sliding. But they're also not efficient. When you produce that much oil, you're not extremely efficient in your consumption and your use. But you have to prioritize producing it, and there's a lot of reasons that Russia should and probably will prioritize production. And we had pretty alarming fears a couple months ago about production coming off in Russia. Prices were moving up on the back of those thoughts. Then June data came out and production was higher in Russia. That helps keep a lid on prices. So it's really about, are they going to maintain their output levels? They're about 10.5 million barrels a day. But the most serious thing is they maintained exports, and they've increased. They've obviously increased flows on water. Waterborne exports. India's consuming or buying over a million barrels a day of crude, and Italy is buying over a million, or like 500,000 barrels a day as well. So you're seeing a lot of this go up, and you haven't seen any curtailment in pipeline flows of crude from Russia to Europe. So that's the wild card of, does all that get maintained? And I would say that if they're prioritizing their economy, they should. I'm not saying that's a given. Any war scenario, things get really tricky, and it requires people to focus in leadership. But I also think you're getting money for that. You have jobs with that. It's keeping people busy. There's a lot of reasons why you would maintain that. Sorry, that
Yeah,
was a
good
long-winded
points.
answer.
No, I appreciate it. And it all kind of ties together for me. We know that Saudi crude oftentimes goes to India and China, similar to Russian crude. Can you help me? I haven't even looked at the price of Russian Urals in a while. It's been a second. Is there any situation in which that discounted Russian crude heading to India and China somehow impacts Saudi and their ability to maintain their price?
So I think it already has in a lot of ways, and it is that's the other really interesting piece. And political balancing act I think the Saudis have had is, and something that we, from a geopolitical but also from an oil standpoint, really have to appreciate is the interwoven relationship that, and I think we've talked about this before, Gabby, of China and Russia and that relationship, but also now the Saudis and their relationship with China, and that interwoven, and this comfort level. And Iran and Saudi Arabia don't really get along, but Iran and China get along really well. And China is purchasing over 1.5 million barrels a day, from Iran, and really supporting that economy and really enabling it. Very similar to what they're doing now with Russia. But the Saudis, they are being impacted by this discounted Russian crude going into their places that they were sending this crude. So they're certainly being impacted by that. But also their prices are high. People are demanding this, so demand levels have been good. So they can sort of look through it, I think, in a little bit in some ways. And interesting enough, they're actually burning Russian fuel oil. So the Saudis burn about 1 million barrels a day during the summer months of crude oil just for power. And that was, if you remember back in September when we saw the first oil price spike, well before the war in Ukraine, it was because of the power switching, right? Where people were taking their natural gas, power plants, and they were burning diesel with them, and that's what drove that initial demand. And we saw $80 oil. The Saudis do this every summer. They burn about 1 million barrels a day of crude in the power sector because it's really hot. They are using discounted. They're buying Russian fuel oil, and they're at a severe discount, and they're burning that instead, and then they're able to maintain their exports.
Really?
So, yes. So you think about that. That's 1 million barrels a day, probably over the course of 3 months, an extra 1 million barrels a day that they have that they can sort of put out there. And that's where I think sometimes that I fully believe they fudge their numbers, the production figures, we never get to see them. We don't know what a decline curve of their wells look like. So yeah, they can do that. But I thought that was it's a good little anecdote to realize of, the interwoven like connections what people are doing on the market with this discounted crude. And it's about a 35. I mean, they maintain Russian Urals, is about a $35 discount to Brent. So you're looking at, I mean, if you're $100, you're looking at now that we're at $95, if you're thinking, okay, there is a point, and I think you were almost getting to that question or alluding to that, and where my brain was, where it gets too low, right? Is that prices go down, or like we go to $80 Brent, and then that's minus 35. I think something to point out is the Russian fiscal break even pre-war in Ukraine was about 40, low 40s. So their fiscal budget breaks even at about $40 a barrel, maybe $45 a barrel. That's really low. That's not how the Saudis, their fiscal budget is extremely, is much higher.
Yeah.
Obviously the crude, the break even to produce it is $4 to $10 a barrel. It's very cheap. But the actual fiscal side is a lot harder. And I think that's important to realize for the Russians, is that they can withstand, and have proven from 2014 to now, that they can withstand lots of sanctions and lower crude prices and still be alive. I know it's hard for people to get, wrap their arms around,
Yeah,
but they
especially when China and India is supporting them. They're kind of like, all right, well, see
exactly,
ya.
exactly.
So
Even
long.
yep, right, right, absolutely,
And with that, moving into China, let's touch on China, like you talked about.
wonderful.
I am not an expert on China by any means. I am deeply concerned about everything happening in Taiwan, and I want to get your thoughts on it. As someone who I consider an expert on China, what do you play out in your head as a possible scenario? What keeps you up at night? How do you think that's going to impact markets in general? Should all
Uh,
my doomsday fears be validated, or do you...
it's as you know, I think, and you can jump in and ask more, and you should sort of pivot and ask more questions on it, clarify, because it's again one of these really, if you're to pick the big chunks of things to follow right now, the biggest things in the world, it's sort of, I would say, U.S. supply is a really big deal. Geopolitical, like the entrenched war in Ukraine, really the price of natural gas within Europe, the inability to get natural gas, the impact on fertilizers, the food and energy crisis that we now have in Africa, we have it in the Middle East. It's going to make Arab Spring look like kittens and daisies have popped out something. I mean, it's going to make that look like nothing, what we're about to experience and what we are beginning to experience. And then you have this backdrop is all this China thing, which is, I think it's not getting a lot of love and attention because it's hard. It's not on the forefront of the people's minds. So you don't hear about it if you're, on Bloomberg and CNBC on a daily basis. I mean, you do if you're watching the Bloomberg Open at night, you're the Asian Open at night, and you obviously the Taiwan thing, the stock market, the Asian market crashed. Didn't crash. I mean, it came down considerably. So what happened was Nancy Pelosi, who's the Speaker of the House, she is the highest ranking U.S. Official to visit China as like in office, right? In the basically 25 years, or sorry, to visit Taiwan. And we've sort of not lots of Western countries have basically, taken the backseat on this and done what China wants and not full out recognize Taiwan. You've seen in Europe, Lithuania actually instead of calling it a ambassador's office Taipei, they called it Taiwan. This made China pissed, and so China actually stopped,
I remember
trading with
that.
them. This is impact supply chains in Germany and everything. So this thing is Taiwan is a really big deal, and it's not something simple. It's very like Hong Kong was taken over during COVID, right? They basically they were China plans to reunify all these places, right? Territorial, and Taiwan and Hong Kong were two big pillars of that. They did Hong Kong very easily, probably easier than they even expected, because they were able to use COVID and they were able to use a lot of controls, and they were able to just sort of, I wouldn't say not without shots fired, because they definitely fired shots in those protests. But democracy's over. Like Hong Kong's done. They have it. And Taiwan is sort of the big thing that you can look back to from Mao Zedong to now, of the wanting to reunify Taiwan with the motherland. It's a really big deal. And what's more important, though, and then not more important, but that's sort of the backdrop of that's been going on. You have, increasing hawkishness out of China. We've seen that for the last, 10, 20 years, which is not something new. It's just a, movement in sort of their strategic, aims and aggressions. And it's natural that they really do want Taiwan. And I think we're seeing that it's serious. The real seriousness that the market has to realize, that business leaders have to realize, is that every single business in the world can be impacted by this. And that's because Taiwan produces all the semiconductors. And I say all, like, but it's like China producing 80% of
Majority.
the world's solar panels
Yeah.
and 80% of batteries. They produce the majority. They have one company, actually, the Taiwan Semiconductor Company, that produces most of it. And these are high end semiconductors, low end semiconductors. Like, this is for the Mac that I'm using right now to record. This is for your phones. This is for everything. So if you can think about, the impact of supply chains, it's really big. Even right now, you're seeing a lot of military activity that China. When Nancy Pelosi said she was going, they said, no, don't go. And she went anyway, and she touched down. She was only in Taiwan for an evening. And she made some very clear statements of saying, we're friends with Taiwan, and we support this democracy. And that really has pissed off China in a lot of ways, because China is not a democracy. And I was listening to BBC this morning before we jumped on this, and there's some folks in China that were on BBC getting interviewed, and they were saying, we are a democracy with Chinese characteristics. That's ridiculous to say we're not a democracy, and it's ridiculous to listen to this person say China's a democracy. But it's just the reason it's extraordinarily complex right now is because they put out a map, like the Chinese military and China put out a map that you can Google, and you can see basically they're surrounding Taiwan, and they're doing a bunch of military exercises. And so you're not shipping around there now. There's no flights around there, and that's exactly what they want, right? So you don't even have to take over Taiwan to cause massive problems within the global economy and show the world, that you can screw this up, right? That you will, if you mess with this. And they made that really clear. All the statements from China, all their officials speaking, are saying, if you want peace, then don't do anything with Taiwan. And they're saying, well, that's not fair. Like, you can't just take it over. And they're saying, nope, this is if we want a, peace in the waters, and you want to, maintain the status quo, then leave it be. And I think that this has been going on, that obviously that, I'm not a big fan of the Biden administration. I think anyone who's listened to my podcast knows that, largely from an economic and energy standpoint. But I would say there's definitely something in the backdrop going on with China that's been going on for a while. It's a rollover from Trump and Pompeo. And
Yeah.
I mean, Pompeo, even this had massive bipartisan support. Pompeo offered to even go with Nancy Pelosi, which is like, oh my gosh, these are not, people that you would think would be enjoying
Would
themselves
work
together in a
together.
room.
Yeah.
But I think she even responded positively to that. She even responded. She didn't like poo-poo him or say, "Oh, you horrible Republican." It was, so this has been there's a lot of bipartisan support around that, and that's also really scary to China, because we do have midterm elections coming. There's definitely a reason that Nancy Pelosi did this, and I think shoring up some support before the midterms is a big deal. Maybe taking that the world isn't completely focused on the singular issues that everyone seems to be focused on. So I think that's a big deal, and I know China sees that also as a big deal. Is that, look, if you get momentum on this, and China's a very bipartisan issue, and if you get people educated and you get momentum on this of what China's actually doing, you're going to have support within Congress to be tougher on China. And, you could have, obviously, have a flip in the midterms where people, if it becomes a little more red, it's going to be more hawkish on China. And then you change in a couple of years, you change who's in the White House. That's going to be a game changer. And I think that China isn't changing anything they're doing. They're just doing it right. The reunifying Hong Kong with the mother, or Taiwan with motherland, is something they've wanted to do. And just conceptually thinking about that, that's a really, really big deal. They basically need to complete that with the next 30 years for their 100-year rejuvenation goals. It's a critical part of national rejuvenation, is reunifying Hong Kong with motherland. And Hong Kong produces all the world's chips, so that's why you hear in Congress these chip acts and these bills of all this reshoring of producing stuff in America. It's something that we need to be doing aggressively, and doing very, very quickly. And it's also something that we have to realize that with our Asian allies, which many are very much on the fence of whether or not they're allies or not, of producing this stuff, but producing chips in other countries, especially in the US or in democratic countries, that's a really big deal. And I think, and you need a lot of energy to do this as well. So something that a lot of people are not thinking about is Taiwan needs natural gas to produce these chips. And by screwing up that, by doing military exercises in and around and above this country, they will stop flows of natural gas into their country. And I think that's also a really big deal of like how critical energy is in all this, and something people aren't um, directly paying attention to, let alone Chinese coal consumption, Chinese coal output, which has me pretty alarmed from a military standpoint as well.
Why does Chinese coal output have you alarmed from a military standpoint? Talk to me more about that.
Because I think that they've increased output by 100 million tons in 5 years, so they're nearing this sort of 400 million ton mark. And I mean, it's a lot of coal. They've ratcheted up. If you
Yeah.
look at Chinese raw coal production, they've really ratcheted up in the past 5 years. And you don't do that unless you like. That's domestic energy security, right? And it's everybody, and you can read all Chinese texts and literature that's been going on. Everybody wants food and energy security, but you really want food and energy security if you want to insulate yourself and you want to be able to do things like take over Taiwan, or have territorial disputes, or you think the world's going to cut you off or sanction you. If you have all this coal, you have a domestic, you have power supply, power security, domestic power security. And I think it's critically important to think about how important domestic power security is. Like the ability to have coal and not be reliant on natural gas imports, or they're reliant on crude oil imports, but they get a vast majority of their crude from very friendly countries to them,
From
from Russia,
yeah,
from Iran,
Russia
from
and
Saudi
Iran.
Arabia. So all these countries that they can, yes, they have to get it through the waters and everything, but they're good with this, and they're getting increasing supplies of natural gas via pipe from Russia as well. So I think that coal output, the dramatic strength of that production, one, it shows the climate stuff that they're talking about, which they actually said today as part of the response with the US, to Nancy Pelosi going to Taiwan, was that they're not talking with us on climate change anymore, which I mean, newsflash to everyone,
Yeah,
it does not
shock.
matter.
It,
um Shocking,
even
and it
when they
doesn't
were
matter.
talking about it, they were still increasing their coal production.
Right.
And
They
the
were
only
just
reason
taught
they
it
do
was
anything to do with renewables is because they want to cap the market. They want to have the market on renewables. And it has nothing to do with them wanting to go green.
Yes, so I think that the whole it's interesting because they've used that and it's a great card to play with Europe, because they buy so much of their wind, and they buy so many of the wind turbines and so much of the solar and the polysilicon. But when it comes to actually, like, when they're saying, hey, we're not going to talk to you on climate change, and it's like they were never serious about it in the first place, but it is a card that they're playing. It's something people really should recognize of how used climate has been for China, how big a piece
Mm.
energy is. And I think the energy piece is, this is where when you're looking at domestic energy security, there to have grid reliability and power reliability, and it makes me very, very concerned about the U.S. trying to go to a green grid by 2035. That's ridiculously soon. And to have that's all
Yeah.
renewables in the grid. You would have you don't have redundancy, you don't have a stable grid, it will have energy security issues and the cost of it. And so that's the opposite of what China's doing, is having a redundant and very, very stable grid. And that if you think about the impact to your economy and your people and the ability to mess with countries, you mess with energy. And this is something that they're doing. Obviously, they can do with Taiwan, and they can, like, for the fact that we won't be able to, we won't be able to curtail their power because they have all this domestic coal production, and that's really, really important. Is that something they can control? And you want to control that if you're thinking about becoming more if you're going to be more aggressive. And I say this a lot is that it's not about thinking about it. This is a trajectory that China's been on for a while. It's just taken a lot of folks around the world to sort of realize that they're not friendly. This isn't a country that wants to have a. They say they want a peaceful rise, but this is the rise, and it's not going to always be peaceful. It's just the reality of it, and we have to take that. We have to take that really seriously, and it does get very intertwined and interwoven with business, with risk analysis, and with energy security.
Absolutely. Well, that feels like maybe a good place to stop, and then we can revisit and do another one of these and check in on any developments happening with Taiwan and what China has done in the coming weeks.
Absolutely. No, that was fantastic. Thank you so much for the excellent questions and the commentary
Oh,
and
thank you.
your
I feel like now I have every time we speak, I have so much more to think about and dive in on, and then I want to talk to you again. And yeah, it is. Anytime I speak with you, I learn tenfold what I do
well,
from
that's
anywhere
awesome.
else.
I really appreciate that. That was great and we will absolutely have you back and we will be doing it again soon. So, thank you so much folks. Talk to you soon. Bye.